Clarity, well, I've never known it in my profession in economics. It is remarkable when there's a specific industry that the administration targets, arm twists and say, I want you back here. And, if you don't, we're going to put a tariff of 200% on or whatever.
Previously on Stay in Your Lane.
2% still the appropriate target. Well, Jerome Powell says, yeah, we haven't given up on the 2% target. Maybe if we get down to 2.5%, we can declare victory. And even though, say, yeah, we're still pointing to 2% target, maybe say we've gotten pretty close.
Allianz is always, you guys are global. You're seeing what companies are struggling and taking from a hits perspective on bankruptcies and claims. But do you have much visibility of conversations, or do you get to see from your side what are companies in North America and the United States especially, are they spending their revenue differently now than they were in the past, or are they not spending it on an advancement?
I think the short answer is this. We, for years, have actually enjoyed very low claims for a number of reasons. And that has reversed this year, but we're well prepared for it. So it hasn't been damaging to our company. We set ourselves in position for that. We are exposed to retail very heavily and construction as well, and to a certain extent, automakers. So those are our sort of riskiest sectors that we're involved in. Mm-hmm. And retail is has to be very careful all the time, but more so now in terms of inventory management. So there is some degree there. I think what we're starting to see in industries overall, all around, is investment in AI. Now, you might think investment in AI in construction, well, is that a big deal? Well, it sure will eventually be. So I think the companies that are out in front are going to be doing that. So, but it's an expense, of course.
Right.
So it's going to be pressure on the bottom line. It's an investment. It's pressure on the bottom line for now, and in terms of depreciation, hopefully big payoffs later on down the line. Now, as I mentioned, we do see more financial stress among businesses all around, particularly in those three sectors. But it's still, business is still reasonably strong.
Mm-hmm. And in our industry, we've seen a lot of carriers that have been in business a long period of time, 40, 50 years or longer. We've seen a lot of them closing their doors.
Yeah, I know that you had seen that, and our people look at that as well. They look at individual sectors. I'm the big 35,000 foot guy, but I know that's been a characteristic of the transportation industry, and I actually was curious what your view on it is. That getting any better, or flatlining, or getting worse?
I would say we're seeing it come to a head. Okay, and I will say it. I would present it this way, because our industry's always purged those that, in the ups and downs, it purges itself so that supply and demand are closer. We still have an excess amount of supply in our industry for the volume that's moving now.
Mm-hmm.
From an economy perspective, we would need more volume to tighten capacity up towards an even level. But we're seeing it from attrition, and I think that we're going to continue to see more attrition throughout the year, trying to get to that equilibrium area. We're not there yet. Much like inflation, the problem is we're going to lose it seems like we're losing a lot of really good long-term people that have been successful for a long time. The carriers I've talked to that I don't do business with, but I have communication with, have told me that they couldn't justify replacing equipment, and it was time to replace equipment.
I think, excuse me, I think another factor, especially for the small to medium-sized trucking companies, is the fact that you've got a lot of founders out there that are getting up there in age, and a lot of their children and their grandchildren don't want to be in the trucking industry. So they get to a point where, okay, do I invest? Do I sell? What do I do here? So I think, which is pretty prevalent in the trucking industry. It's a family business for the small to medium size. So I think you see some of that now too.
Yeah, and that's typical often of family-owned businesses. The founder has made a lot of success, has a number of children, and as you say, they want to do something else. So what do? You sell off the company, and that happens on farms a lot too. So, and that's how you get development, property development. So I am curious how much capacity you think you've lost over the past few years.
Um, it's a lot, but I think to your point, I think the economy was artificially fed so long during COVID, right?
Yep.
That it put us in this position where the dig out's not easy. It's going to take some time. But I also think we have some other things that have happened from a legislative perspective that allowed people to kind of get into the industry, maybe that shouldn't be or that shouldn't have been, which I think Secretary Duffy is doing, doing his job trying to figure out, what do we need to do to tighten up this because of fraud and insurance costs have skyrocketed. Just from 23 to 24, insurance for the trucking companies went up 12.5% on the average. So it's going to be maybe more than that on the smaller and medium guys that Joe was mentioning. And these make people say, hey, do I stay in it? Where's the light at the end of the tunnel? Because, month to month, you're going from the black or to the red for 6 months at a time or more. The only reprieve that the carriers have had in this industry in the past year without increase has been tires, but tires coming down 3 or 4% from an overly inflated number during COVID is not really giving them any break, right? So when you see what the equipment now costs, and when you see what the market is from a supply and demand and a pricing perspective, it's definitely harder than you can imagine. I think if you're trying to manage and run a company, we've seen so many startups close up as quick as possible. So I don't know that I can put a number on it from a capacity perspective. When you see policy changing, like as of last week, they're not giving away non-domiciled visas or CDLs to drivers with non-domiciled paperwork. They're starting to close up those, but does this take 5 or 10 years to? It didn't happen overnight. It's happened over 20 to 30 years in our industry. So when they start to tighten it up, I think they're operating much like our interest rates. They make a correction and wait to see the impact before making another correction, right? So I think we're navigating that as an industry from a supply and demand side and from an overall perspective.
It's interesting you mentioned the insurance. That's been consumer insurance on autos has been one of the biggest sources of inflation. We're talking about 20% at one point inflation from year over year. And the reasoning is something like this. Look, the supply chains still haven't been straightened out from COVID, or, they were a year or two ago. So that means that we've gotten more expensive chips. And as you know, every vehicle on the road now is run by computers.
Correct.
So, you have these more expensive chips, you have more complicated cars, and maybe apparently during COVID, people forgot how to drive. So when you have an accident, it's suddenly more expensive to fix a
Yep.
more expensive car. And that's why auto rates went up. I imagine it's the same thing mostly in trucking industry too.
I think, getting the parts, whether it be for the automotive industry or for the trucking industry, where parts were readily available before, now there's a wait or the price is a premium. These are all things that we're all navigating and dealing with. But I think in the end, the question is everyone's waiting to see when do we see stability, which I don't know that that's a realistic question yet.
It's as you mentioned, it's a little hard on a crystal ball because there are so many moving parts now, particularly with the tariffs, because they do seem to change every day, and we know that it takes a while for them to flow through. So clarity, well, I've never known it in my profession in economics.
Yeah, no. I mean, like you said on the last taping we had, if you were an engineer, 2 out of 3'd be good enough, right? Or in this 2 out of 3 is pretty good, but if you're an engineer, you'd be out of work.
Oh yeah, and the
That's how
plane
you
would
deliver
crash.
it. Yeah,
The plane would crash.
the plane would crash. We've seen some of that, unfortunately, too.
Yeah.
Joe, do you have any questions for Dan?
I just had a question, Dan. In your research and the numbers that you look at, have you seen it? Have you really seen manufacturing starting to trend back to come back to the U.S.? And I mean, I know that's one of Trump's big objectives is to get to reshore manufacturing. Are you seeing any of that in your numbers?
Not yet. There are a couple of different measures we look at. Durable goods orders, for instance,
Right.
and those are highly variable. So we look at core durable goods, which is basically non-defense business orders, ex-aircraft. In other words, it's sort of an underlying proxy for business investment. And is variable month to month, but it's still substantially below the long-term average. And industrial production, which measures everything that comes out of the factory doors, that's pretty weak as well. And then there's another survey that people watch called the ISM survey. Anyway, the point, answering all your questions, we have not seen a real surge. Neither have we seen decay. So, we had been seeing decay before. It's really hard to detect any benefit of the tariffs yet. Those things, I've been talking this whole time about things, going to take months to affect the consumer. Well, if you're going to be reshoring, those things take lots of months, up to years.
Sure.
There are a few sectors that seem to have responded, like pharmaceuticals, and the president has twisted his arms very hard on some sectors and had some success doing that. So it just hasn't shown up in a lot of the numbers. But if you look at those sort of anecdotal evidence, you can see it there.
Okay.
So just a little early, probably, if it's going to happen.
I think so. And again, there's more than just tariffs involved, but it is remarkable when there's a specific industry that the administration targets, and again, arm twists and say, "I want you back here," and if you don't, we're going to put a tariff of 200% on or whatever, and some industries are saying, okay, well, in that case, maybe we're thinking about opening a new plant anyway. Maybe we will put it in the U.S.
Mm-hmm.
So that is definitely happening, but on the large scale, it's hard to see it yet.
Continue watching on the next episode of the Stay in Your Lane podcast.